A very good morning and welcome to one more of our blockchain business models and applications webinars. I'm very pleased to welcome with us today in class Relay James for a very interesting conversation. Welcome. How are you doing today?
Awesome. Thanks for having me. I'm doing very good.
Fantastic. So how about we start by telling us a little bit about yourself and how did you end up working or being interested in the blockchain space?
My initial background started studying as a mechatronic engineer and building technology. I was used to build robots and my goal was to sell them. I quickly left that because I didn't like the corporate structure, and then went into my own business, started a marketing agency, built that to 30 staff, and then I was always looking for the next big opportunity because that company has done quite well. And 2017 came around, the bull market happened with crypto, and you saw everyone getting rich overnight, or so it looked like. And that one first got me into crypto. And then we had the bear market. And then 2020, late last year, we started to see crypto coming back. And I was like, all right, clearly something's here. I need to figure out what it is and ride that wave with it. And it just sucks you in. Like it's a big, deep rabbit hole that you get sucked into. And from there, I co-founded DeFi Link, which is a technology company that builds, we're working on multiple blockchain projects. And then we're also building one of the contributors to a few different decentralized networks, SofaSwap, DeFi Wonderland. And there's just lots of stuff. There's so much happening in this space, and it's very addictive.
Yeah, we're gonna go a bit later on to discuss further on the DeFi story. But I wanted to ask you, what was the tipping point in your life that you said, okay, this is an area that I would like to invest and become an expert and upskill myself? And also, what was the thing that actually attracted you the most? Was it crypto getting rich, or was it blockchain? That's a fantastic technology that can have tremendous applications within and outside finance.
Without a doubt, it was, and I think this is the case with most people when they first get started, it was that there's a lot of people getting rich. Like when you don't understand it and you don't understand the technology behind it, which I now do, and I'm grateful I do, but in the very early days, I didn't. You just think it's a casino and more people are winning than are losing. And you get really caught up on having fear of missing out. And this is what I initially started with. And it was crazy. You put in $100 to start, and then suddenly it's $1,000. And then you put in $1,000 and suddenly it's $10,000. Like, if this happens for long enough, you really want to figure out what is going on here. Why is this happening? So I started to learn, and as I started to try to figure out how these people were getting very rich, I started to figure out and talk with a lot of experts in the field, the technology behind it, and why is it actually such an evolution, and why is it the future, right? And now I'm all in. Like it doesn't matter what trend Bitcoin's doing or if everyone's scared or anything, I'm convinced that that's the future. So I'll always be all in.
And if I may ask you, what kind of preparation you went through in terms of upskilling yourself, in terms of understanding the space? Did you follow any course? Did you do self-reading? Did you get into networks? What would be some optimal, let's say, pathways that someone who's interested in the space could start engaging with?
That's a great question. There is a lot of great content on YouTube. So I started on YouTube, and there is some all the way from how to create your own cryptocurrency and list it, down to like really basic steps at the start. And then there's everything on YouTube, very quality stuff, all free. That's why YouTube's great. And then from there, I went and started going to some blockchain meetups. I co-founded the company with Khaldun Alachka, who's the co-founder of the Dubai Blockchain Center, and partner with him. And he's been great in I guess, mentoring me through crypto, and then talking with a few different blockchain developers as well. Now that we've got them on the team, there's a few that they've got their doctors of philosophy in blockchain, and just talking, being in the community, right? Crypto is this very community driven thing. So being on all the channels, being on in the Telegram groups, the Twitter on the YouTubes, and just being in it and playing around with all the platforms, you really start to get a good understanding of it.
Mm-hmm. And you mentioned you started your own company, you co-founded your own company, DeFi. And so what I would like to ask you now is, what gap did you find in the market that you thought that this particular venture could potentially fill? And also, what kind of preparation and market research you went through? And then we'll go deeper into what does this company actually do.
Okay. I was seeing coming from a traditional business world and having a lot of traditional business success and knowing a lot of very successful business people, but also on the other side of that, having a very strong technical capability and technical understanding of how technology works from my engineering background. What I immediately started to see was this massive gap of all these crypto nerds and crypto developers that live in this decentralized world, and they want to build great technology, and their whole mantra is down with the banks and down with finance, and they're like trying to take down the traditional finance system, which they kind of are doing. But if you look at on the other side of that, you've got trillions of dollars of existing financial systems and wealth and enterprises. They're not just going to lay down and die. They're not going to just, oh, okay, there's decentralized world now, you take over. They're going to integrate with it. So the opportunity I saw was this massive gap. Everyone's focusing on decentralized finance and making everything decentralized, but there's still humans and people that need to interact with it. So we started focusing on the bridge. What does the bridge look like between CeFi and DeFi, centralized finance and decentralized finance? And that's really what we're building is that bridge between Web 2.0 and Web 3.0 and helping enterprises and high net worth individuals integrate, anyone really, helping everyone and anyone, enterprises down to individuals, integrate with the yields that are available on DeFi, because it is a full-time job to understand this space. So you just want a simple platform that does it for you and makes it very, very simple, like me interacting with Commonwealth Bank. You don't need to know all the background stuff that's happening there to interact with Commonwealth Bank. You're not the one issuing loans to people to buy houses. You just put it in Commonwealth Bank. So we essentially do that for them on the blockchain though.
Mm-hmm. That's fascinating. So I'd like to delve a little bit deeper here. And so what is the value proposition that your venture brings out? What is it that you do that others don't?
So we make it very, very simple and powerful. So DeFi has a lot of, or crypto as a whole is a very emotionally driven market. That's why it fluctuates like crazy, because it's heavily emotion driven. So what we're building is artificial intelligence and machine learning algorithms into the platform that add some certain suggestions and and we're also tracking it with nice dashboards and data, make it take away some of that emotion and add some more intelligence to your finances. And then also what we're doing is aggregating across 50 different platforms on the blockchain, all the best yields that are available, we aggregate them all into one platform. And then we add some auto compounding features. So you might, if you wanted to get a high interest rate on stable coins or US dollars, if I'm a company, I don't want to be in crypto. I just want to earn yield on my cash in the bank. What we're enabling them to do is they just basically put their cash into the platform, and then we aggregate that for them across the blockchain, and we can get them a 17% yield on their US dollars, which comparing that to a bank, they'll give you 0.5% if you're lucky. And then that means 17% over 5 years, $100,000 would be $240,000 or something like that over 5 years.
Right.
It's crazy.
You use the word emotional, and to be honest, I have rarely heard this word connected with crypto. So I'm intrigued a little bit more into why did you use that particular word?
Most people don't understand the technology in crypto. They just understand that it's kind of like stocks, and you want it to go up when you buy it, and then you sell at the top, and then you buy the dip. That's about as far as most people's understanding goes. And that's because it's very new. So people will start to understand this. But because they don't understand it, they are basically just playing it like a casino. And it's very emotional. So you see your money triple, and then you go, oh my God, we're going to the moon. I should have put in more. So you put in more, and then it goes up a little bit and then it dumps and you lose everything. That is a very emotional journey. And that happens constantly, day in, day out. Even if you put a trade in and it goes up and you make some money, you're there going, oh, I should have put in more. Or if you lose everything, it's like, oh, why did I buy that? Like, you never actually emotionally win in crypto, because you either didn't put in enough, or you put in too much, or you missed it, or you got in late, or it's just because there's so much money flying around in this space. It's very emotional for a lot of people.
What is your revenue model? So how do you make money?
We take a performance fee.
Okay.
So the platform just automatically takes a performance fee. That's it.
And your clients, are they organizations or also individuals?
Both. So we're building two platforms. So DeFi Link is it's a centralized company and it's a regulated exchange, and it's very, very simple for people to invest with. And then we do all the blockchain and Metamask and all of that stuff for them on the back end. And then we're also building DeFi Wonderland, which is what I'm one of the core contributors to. And DeFi Wonderland is a completely decentralized DAO. And that one, anyone can interact with. If someone in China can connect their Metamask and they can use it. And the platform will take a performance fee, very small performance fee. And then we've got APIs and bridges that integrate that platform into the centralized world, which is where I believe most of the enterprises and the older generation will connect through.
Can you explain a little bit what does this MetaMask do? What is it?
So MetaMask is in my opinion, the best wallet out there, the best crypto wallet out there, or it's the most popular at least. And that one I'm the custodian of my key for my crypto. And I can use it on my browser. I can use it on my phone. And it enables me to connect my assets, my crypto assets, to whatever decentralized app or platform I'm playing with. So I've got my $10,000 in crypto in my wallet. What do I do with that? What is a wallet, right? I go onto the platform, I connect app, I literally click a button that says connect wallet. And now suddenly that platform is interacting with the $10,000 I have in crypto. And I can play around with it and I can move it. I can put it into different pools. I can go on different browsers. I can buy NFTs, and that's how you do it. You do it through the MetaMask wallet.
Interesting. You use the word DAO, which I will ask you a little bit later, but can you maybe share a little bit more about this Wonderland?
So Wonderland, what I see, because I'm in the space 80 hours a week, is there's so many very fine, difficult to understand, but very high yielding opportunities out there in the crypto world. So I can go into different platforms and I can earn, at the very least, like I said, a 17% interest rate on USDT if I play my cards right. And that's if you play your cards right, which is difficult to do. And then on other coins, you can get a 40% to even a 600%, even plus, but I don't think they're really stable when you get that high. But an interest rate or a staking yield on my crypto. So if I can have my crypto double every 2 months just from playing yield farming correctly, then that is extremely powerful. So our platform does all that for you. We get the best yields. We go to this platform, take that piece, integrate them all into the back end. And then we're building decentralized hedge funds. So you can, anyone can run their own hedge fund, and it's open, and you can track where everything's going, and you can track their past history. And then you put your money into that pool or your crypto into that pool, and it will take it through a series of investment strategies for you on your behalf. And I believe that a lot of people, they're not going to want to be day trading themselves. They're not going to want to be figuring out all the newest protocols and where the best yields are. So you just chuck it in a pool that's got good history and it will do that all automatically for you. And then the second layer on top of that is a lending protocol that we're building on it. So one of the gaps there that I see is if you look at how people build property portfolios in the traditional world, you build a property portfolio by buying one house. The house goes up a little bit. Then you leverage that first house to buy the next house. They go up a little bit in value. You leverage those two houses to buy the third house. You're never actually selling the house, which means you never pay capital gains tax on it. So you get to leverage the wealth creation without paying the government, the tax man, for the wealth creation, which leaves you extra wealth to then buy the next one and keep this cycle. So what crypto will do and what we're building is enabling that same function to happen in crypto, where with the lending protocols, you've done some great yields. You've got $100,000 in different investment strategies in crypto. You want to start leveraging that. You don't want to spend it because you're going to pay half of it away in tax or a quarter away in tax. So the lending protocol will enable you to take those receipt tokens, which is to say you have $100,000 invested in this pool. We will take the receipt token, which is how you claim that $100,000. We'll lock that as collateral in the lending protocol and enable you to borrow against that collateral. So you can borrow USDT, or when we created an Australian stablecoin, Australian dollar stablecoin, and then you can spend that. So you'll be able to keep your assets in there earning a yield and still be able to leverage them and spend it.
Very interesting. And it also sounds a little bit complicated, but
yeah.
I'm very tempted to ask you, you know better than me that for such a long time, anything related to crypto in the real world or, in the incumbents has been looked with caution, has been looked with sometimes very much under scrutiny. So you said that you've got also institutional customers. So how do you build trust in this space for institutional customers to work with you and associate with you, with your company?
Education is one thing. And the beauty of it is that I think a lot of them are starting to wake up to the fact that this is the future, and you're getting a lot of very intelligent people now that used to say negative things about the space 3 years ago, like Steve Wozniak, for example. He used to be like, I don't really care. Bitcoin's nothing. This is 2017-ish. And now he's come out and said it's the future and it's going to happen. So for Steve Wozniak, which if people don't know is the co-founder of Apple with Steve Jobs, for someone like that to start saying it, and here's just one example. There is thousands of very large institutions and very influential people starting to change their mindset. So I think there's just this understanding that's naturally pushing them towards us now, which is great. And we're just acting as that gateway when they're like, I think I need to know something about this. We're there to help them with that. So we're not trying to necessarily coerce them into this. They're already coming in. We are just there to facilitate that once they realize that they need to understand what this is. And that's what's happening. We're doing a workshop in Sydney with a capital firm and an investment banking firm in 2 weeks. And they just called us out there and they're like, we need to do a full day workshop with the team to just get a whole rundown of what's happening, because we've just realized that this is about to take off without us and we need to get in first.
I saw on LinkedIn the other day, you had a very interesting question around how to have own control of assets without the need of a third party. And I find this very fascinating. So I would really like to ask you your thoughts on that and how do you approach this?
So most people at the moment, because it's still new, when they buy crypto, they'll buy it in a centralized exchange. They'll go to Binance, CoinSpot, Coinbase, Kraken, whatever, and then they'll put their dollars in and they'll buy the crypto. And that has a function because it's facilitating the fiat to crypto on-ramp and off-ramp. And that's where centralized exchanges come in, because they connect, I guess, the real world to the blockchain world. Then they leave it in the exchange. And that's what I believe is the mistake. Exchanges, you don't own the wallet key. You don't hold it. You don't know what your key phrase is. You have no idea. And there's no way for you to find out, because the exchange has it and they have everyone's, and they just group everyone's crypto into one spot. Sometimes they can get hacked, and they have been hacked in the past. I remember 2017, when I was on a few exchanges, there was this one event when one of the exchanges just suddenly, everyone lost 25% of their portfolio. It's like, suddenly you just had 25% of your crypto taken. Where to go? And they can't get it back because it's on the blockchain. It's irreversible. It's no one owns the blockchain or any blockchain.
This hack, does it mean that the keys have been stolen?
Yeah, they managed to get into the system somehow and send the crypto out of their wallet into a different wallet. And once that's done, there's no reversing it.
I agree.
And you can't complain to anyone because it's decentralized.
Exactly.
So then MetaMask wallet enables you to send it out of the exchange into your MetaMask wallet. And now you hold the key. And if you lose the key, you lose your money. So write down what the key is. But then you control it. And that gives the control to you. Yeah.
Now, a question which might be a little bit simplistic, but I would like to ask you just for our students also to get things clarified. So let's say you want to buy some Bitcoin or just buy any kind of cryptocurrency, and you go to a Binance or you go to a BTC market, and you say, I want to buy, let's say, just giving an example, one Bitcoin, and you spend this 60,000, 65,000 Australian dollars. I don't know how much does it actually cost. That particular Bitcoin that you will own, where does it come from?
So, well, you bought it from someone, right? So that's all that is now I'm not a technical blockchain engineer, but this is the way it's been explained to me. And it makes a lot of sense to me like this. The crypto doesn't actually move from, it's not like this, like my pen, it doesn't move from my wallet to your wallet. What happens is they update the ledger on the blockchain. So basically your key is not actually, your Bitcoin is not on your wallet. If this is my wallet, my Bitcoin's not on this wallet. All this is a key for me to open up the door to look into the blockchain and see my particular ledger, which is attached to that wallet. And then on that ledger, the entire network of all of these blockchain servers, they all agree that I have a Bitcoin stuck on that ledger. And then all it's done is it's come from some other place. So there's some network or some wallet address, whatever, choose a place.
What does a Binance do? Does it help you basically open that door?
So Binance and centralized exchanges, what they have is they have a big pool of wallets that they basically, you get 50,000 people all send some Bitcoin into the Binance wallet. And then Binance has their own single wallet where they store everyone's in one place. And then they have their market making, and they have buy and sell orders, and you can buy it at certain levels. But they're just a big, basically compilation of everyone's crypto in one spot. It doesn't actually happen on the blockchain. And then when you send it out of Binance, then it will happen on the blockchain. But for then, it's all stuck within their own servers at that point.
But who are these people who would feed Binance, that Binance pool? Are they customers? Who are they, investors? Who would these people be?
So it's been very interesting to see how it all works as we're building these. Some of them are customers, but usually there's liquidity providers. Right. The entire blockchain is built on, and all of these platforms are built on tapping into liquidity providers. So a lot of exchanges, there might be 5 exchanges that all tap into on the back end of one main exchange, and you don't know about it, but they're all using the liquidity from one main exchange. Or some of them might plug into various different platforms out there, which are decentralized exchanges or decentralized protocols, and they just tap into the liquidity there. So someone at some stage, it could be a large institution, it could be a whale, they've put their money in somewhere, and then that's just openly used in the crypto world because there's some protocol that enables them to switch it around.
Right. And what is a whale, for probably anyone who doesn't know?
Whale is one of the people that can manipulate the market because they have so much crypto of a particular token, and they're just the ones that have a lot of crypto assets.
And these assets, would they be stored into an exchange in just a wallet? Where would these assets be normally?
If you were a smart whale, you would have it offline. You would have it on a Trezor wallet, which is like a physical USB wallet.
Right.
If I had 500 Bitcoin, I wish I did. You would have it on a wallet that's stored offline.
So is this the cold wallet?
Yeah, cold wallet storage.
Cold wallet. Yeah.
So some of them have it there. Some of them probably just have it sitting in Binance. Some of them would have it in a MetaMask wallet. There's 3 real core ways of storing it. It's hot wallet, which is MetaMask wallet, cold wallet, which is your Trezor physical device, and then just keeping it on the exchange.
Now, without getting into any kind of advice, because that's not the point here, could you maybe give us just, if someone wants to start today exploring a bit the space and experimenting a bit with cryptocurrencies, what would be, let's say, an optimal pathway? Where would somebody start? Not necessarily investing, but at least starting to purchase. Let's start with this.
Coinmarketcap.com. I go there a lot and I build out my watch lists and I look at what new projects have come up in the last 7 days and I'll check out some of those. I see which ones have just taken off. Some have gone up 300% in 2 days. Some of them have dumped 300% in 2 days or in 2 hours even. So CoinMarketCap's a great spot. Because people ask me this question all the time, what if you want like a blue chip? I believe when you're just getting started, don't put any bets on, don't buy any meme coins, just start with blue chip ones. So you want Bitcoin, you want Ethereum, and then your network solutions, your layer 1 and layer 2 network solutions, which are the blockchain networks themselves that other platforms are built on, because they're the ones that I would be buying mostly, especially if you're getting in at the start, because each platform is built on those networks. So the platforms themselves might fail, but what we're betting on then is a particular blockchain network or the future of blockchain as a whole by buying those particular tokens. They have very layer 1 use cases, real utility. You need those coins to pay transaction fees to interact with any platform. So instead of betting on one platform, bet on the network that all the platforms are built on. And that's going to be like Ethereum, BNB, Polkadot, Cardano, Algorand, Polygon. I think Polygon's got a long way to go. All of those types of networks, I'll just be getting on an exchange and starting with buying the networks rather than any particular platform.
Right. And if you just want to buy some crypto, would you go to an exchange?
Oh yeah, you need to start with an exchange. That's the thing. The only way to get dollars into crypto is with a centralized exchange.
Right.
So you need to start with an exchange.
Where if you start with an exchange, you hold your key, but they hold also a key.
You don't hold your key at all, just them.
At all? Okay.
Yeah. There might be some exceptions to that, but the typical way of doing it is you have your password. That's it. They have your key, which isn't necessarily a bad thing. Like they don't really get, now sometimes they can get hacked, but the hacks are a lot less now than they were. And the exchanges out there right now are making so much money that they're not really, most of them aren't really interested in stealing your money because they're making so much anyway, legally. So it's a good place to start. Like I have some money in various crypto exchanges still. I haven't bothered to take it off. The majority's off their exchanges, but you can keep it on there and it will likely be safe.
Right. You mentioned the word hack before, but I will also bring another area here, the area of scams. And we have seen a lot in the past, and the recent one is this squid coin token. Why do people, is it a matter of poor due diligence? Is it a matter of this emotional aspect of just simply throwing money into things that are with no value?
Everyone wants to get rich quick, and crypto is, I believe, the best way to do that right now. In terms of numbers and like real data, where crypto has made more millionaires than anyone in the last 5 years, I believe, or at least in the last 12 months. And everyone's trying to chase those highs. So you don't need to understand, or people don't bother trying to understand things. They just go Squid Game. Oh, I know Squid Game. And then they see it taking off and they try to chase the high. They see that it's gone up 10x in 1 day. Oh, it's going to the moon. I got to get in quickly before it leaves without me. But realistically, it already left without you. Like, you're getting in late there, buddy. Sorry. And they try to chase these highs after it's taken off, and then it dumps on them. So when you're chasing the highs, instead of being there before the hype, instead of being there before the highs, you will lose all the time, constantly. But like Squid Game, I haven't looked into the code of that one, but you probably would have been able to tell that it was going to be a scam. Most of these ones are. If you look at the Binance Smart Chain, it's interesting because I use tracking tools that will alert me every time a new coin is created and listed on PancakeSwap, because I want to get in first. And it is about 1 in 40 that are not scams. Think about that. 1 in 40 that are not scams. So it means 39 out of 40 are scam coins.
Wow.
So it is, and this Binance Smart Chain is the one that probably has the most. But because there's so, and I watch the charts because I know what to look for. You can go to poocoin.com, or I don't know if it's .com, but poocoin, if you Google poocoin, you'll find it. And Dex Tools or Dex Explorer. Those two tools, the main scams are going to be rug pulls, where basically there's an unlocked wallet in the background and you can be exchanging your Bitcoin for their coin. But, oh, hang on, it's unlocked. So they just stole all your Bitcoin and they run away with everything. What should be the case is it's locked and there's a protocol in the middle that stops them from just extracting all the Bitcoin that you've exchanged. So then you could come back and exchange your coin again for their Bitcoin. That's the way it should work, and that's safe. But people don't know how to check for that. So, and you can check it on PooCoin, and it says a big red alert. This is an unlocked wallet. Do not exchange with this coin. But people don't know to check that. So I would guess that a Squid Game coin that went up 12,000% and then stole however many tens of millions or hundreds of millions of dollars within like 2 days, you probably would have seen that on PooCoin.
Yeah.
Rug pulls are very, very common. And you see it all the time. You see a coin get listed on the charts. It's quite interesting to watch. I recommend everyone go to PooCoin and look at some of the new coins there. You'll see them start to take off. And they might get to like $70,000 market cap, which means $70,000 have been put into that coin from random people. And then you'll see the chart go red because they've just rug pulled out that 70K. It happens every single coin. 39 out of or 39 out of 40 will have that same structure right now.
Fascinating. Yeah. This week we had some really interesting news with CBDA allowing their users through their digital app to get access to, I think, 10 or 20 cryptocurrencies. Was it expected? Was it? Did you get surprised? And what does this actually mean? What
I did not expect it that early. I didn't expect it that early at all. I'm very happy it is. That's great. One of our investors is Adrian Hondros, who's the former chairman of Commonwealth Private Bank. So he looked after the top 1% of Commonwealth Bank's net worth individuals. And he hadn't told me about anything like this happening yet either. I think he probably knew, to be honest, but I was shocked to see it. And I think it's great because it's going to make the adoption rate of crypto in Australia happen a lot faster. Australia is already a very bullish country on a global scale on crypto. We would be, the last I checked, and this was like, I haven't seen this data for a while, but Turkey was the #1 adoption rate. And then Australia globally was the second largest adoption rate in terms of percentage in crypto when I had last checked. China, the US would be up there as well, Switzerland, Singapore, but Australia is one of the leaders in the adoption rate of crypto, and getting Australia's largest bank to also do that is going to speed that up, I believe. And it's going to make all of these enterprises immediately trust it. They're like, oh shit, like we need to take this serious, which is great for us.
Do you think this will also push for further regulation? I mean, for example, that 2 weeks ago, we had the Bragg committee issuing their final report, and there are heaps of recommendations there. Is there a push for actually making that happen?
Oh, I believe there is. Yeah. From what I've seen, the Australian government has the stance that they would like to be one of the leaders in adopting crypto, from like a regulatory and open standpoint, because you've got China is probably, if they're not the largest bull on crypto, they're one of the largest bulls on crypto. Like there is so many millions or billions of dollars, trillions, probably $1 trillion. If you look at the market cap, $2.5 trillion now, it's probably $1 trillion of that is in China, is my guess. China, their government is pushing all the crypto projects out. So where can they go? They can go to the US, they can go to Australia. And it's great for our economy and our market and our business sector to have all these projects from the countries where the government's kicking them out come to a country, which is currently typically Singapore or Switzerland or countries like that, which have very forward-thinking regulations. Australia has a stance now, which is great. I'm glad they do, that they are trying to also get to that. Whether or not they do it as well, I don't know, but they're leaning more towards the friendly side than the unfriendly side, which is great.
It's funny you mentioned China, because that was actually my next question. What's your take on all this ban on crypto and mining?
If you stay in the crypto space long enough, you will see news come out every 3 to 6 months that China's banned Bitcoin, and they'll make it this new big thing. China's banned Bitcoin. Oh no. But they banned it 6 months ago, and they banned it 6 months before that, and they banned it 6 months before that. China tries to ban Bitcoin every 6 months, and they've been trying to ban it since Bitcoin was created. They just add new bans to it because they figure out some way that everyone found this loophole to still use Bitcoin. You can't beat it. China cannot stomp it out. They're trying to. And all it means is that people have been secretive about it there, but it is still happening. It is, there is still however many 100 million people in China using Bitcoin and using crypto, and they will continue to, because it's decentralized. You can't stop it. Yeah, you can shut down some of the mining facilities, but that doesn't do anything because there's other miners out there. So you're never going to stop the network. I think China doesn't like, and they've seen, I think there will be more governments starting to get concerned about this. Because it does take the power away from the central bank in printing money, and it puts it in the control of the protocols and the platforms in printing money, because printing money is a very important role in society. And I don't know how this is going to play out either, because you've got an inflation rate, which is in most countries, it's like around 3%. And that's because the governments literally just print money. They print money to be able to give it and spend it out in the economy to make sure that there's still a cycle of money. So yeah, you get the downside of your money's worth slightly less each year, but the upside is there's lots of money flowing. And I think that's a fair trade-off. That's good, right? What Bitcoin does is it doesn't print any more money. So you don't get that inflation, but if people don't want to spend it, then that's when you have these economic downturns. And it's the government's duty to regulate that, to stop these economic downturns. Like when COVID happened and people stopped spending their money, the government started printing a lot of money. And that's an important function. It might be bad for holders of a lot of money, but it is also an important function. So I think China's seen that, because if they don't control the largest currencies, the largest amount of wealth in their country, and they leave it on the protocol holders, then you're going to get a lot of important functions start to be a bit impaired.
Some other interesting news that happened last week or the week before was the Bitcoin ETF futures. And also we've heard this week, or I think it was last week, about ASIC also enabling such kind of vehicle. What does this actually mean? I'm
not an expert on ETF futures, but from what I can see, it means that the adoption rate is just going to get more, like, it's becoming more mainstream. People are trading it like other commodities now. Like people have been trading sugar cane and wool since the very early days, trading like real assets. And now they trade, and then they started trading stocks and shares and like these derivatives and entire property markets and the derivatives of property markets. And now the mainstream is starting to trade derivatives of cryptocurrency. That's a big deal. Like that's really just pushing the fact that it's here to stay, which is great, because the adoption rate for crypto globally at the moment is about, from the estimates I've seen, it's about 3%. 3% of the world holds crypto, which is not much. That's not much yet. We're in the very early innovator stage. So it means that anyone who's in space now is about to make a lot of money as the other 97% start to figure it out and get in.
In your opinion and within your work, what are, let's say, the hot topics at the moment in the crypto space?
Well, metaverse. After Facebook's announcement, I bought into 10 different projects 2 weeks ago within the gaming and metaverse space. And then a week later, good old Zuckerberg announces the name change to Meta. And then all of them like tripled.
Yes.
So I bought at the perfect time, and they all tripled. Every metaverse coin went off. Metaverse is the new hot one right now. It was NFTs, and then before that it was DeFi. All of those are still very, very prominent, and they're still in there. But the newest one that's just been added is Metaverse. It was like DeFi, then NFTs, and now NFTs have kind of merged into Metaverse. Metaverse is the hottest one right now. It's what everyone wants to know about. But I still think DeFi is the biggest application of crypto in terms of real world use cases. Decentralized finance is going to be the one that changes things up the most. NFTs has a function. I'm not really that excited by them. And then Metaverse, I believe, is going to be where we start to plug in like Ready Player One. If you've seen that movie, if you haven't seen that movie, I suggest watching the movie. But we're going to go towards that, and the blockchain is going to help us do that.
Mm-hmm. Getting towards the end of this super fascinating conversation, two questions for you. The first one is, what's next for you? So what are your plans and what are the ventures that you are looking in within, let's say, till the end of the year or next year? And also, what could be your advice for our students, for anyone who would like to build a potential career in this space?
It's such a new space and most people don't understand it yet. So you can go into it as a very fresh person that doesn't know much, and you're pretty much where everyone else is already anyway. So there's a very good opportunity to get in now and start to understand it now. And you will, more than any other, if you went into bioscience or something that's well established, you would have to climb the ranks very slowly. But if you start in crypto, you can very quickly become one of the experts because there's not many experts. So it's a great space to just start using some platforms and trading on them and understanding how they work, even if it's not for financial gains, just understanding how and interacting with these protocols, how they function and the mechanisms behind them, because they're just algorithms that just make decisions, right, on a particular blockchain network. So you'll find it, most people in crypto, they're working with multiple projects at any time. So I would try to get a job at a project or even do an internship with a crypto company or a blockchain company for sure. And just start absorbing as much as you can. And I don't think there's going to be any industry that makes the people in it any more money, more money than crypto will. It's going to go crazy over the next 5 years. It already is going crazy. So I would just start YouTube, interacting with platforms, making a few buys and understanding them, reading some white papers, and just start using it, right? Get on there. I've got a YouTube channel, Riley James. You can go on there and I do lots and lots of content for free. Jump on that. And then the future for me. So big focus of ours is building that bridge, like I said. So we're bridging that gap. We're going to be building out the sales team quite heavily to start onboarding a lot of these enterprises. Trying to make the functions of DeFi similar to traditional banking world, where it's very simple and it's very clean, it's very user friendly. That's what we're focusing on at the moment. And I'm preparing my own capital fund, investment fund as well, so that we can start investing into different projects that we advise. And I want to be building a portfolio of as many projects as possible and advise them as best as possible as we go through this bull run and as we go through the next bull run and as the adoption rate starts climbing. So my goal is just to dominate the space, really.
Riley James, thank you so much. That was fascinating, very informative. And I also love your enthusiasm, your professionalism, but also how you are able to articulate all these often complicated aspects into real language for people who probably are not that expert as you are.
All right, awesome. Thanks for having me, and I hope the listeners have enjoyed.
Brilliant. Thank you so much.